Welcome back, everyone, to another deep dive here on Demand and Supply Zone. So silver, huh? Anyone else out there watching this crazy price action we've been seeing lately?
Oh, yeah. It's been pretty wild, to say the least.
We're talking about like a serious drop. I
Yep.
mean, from over 35 bucks an ounce down to what, around 29.53 or so?
Yeah, you got it.
Let me do the math here. Hold on. Okay, yeah. That's a 16% drop in a single week. That's not just a dip, that's a plunge. And with all the trading volume we've been seeing, it's definitely got people talking.
Rightfully so. Big moves like that always raise questions.
Exactly. And that's why we're here today, right? To break it all down, figure out what's driving this silver slide, what's going on behind the scenes. We'll be looking at it from both sides, the technicals, charts and patterns and all that, and then the fundamentals, the big picture stuff like supply and demand.
You got it.
Yeah.
We're going to look at where the price is going, but also why.
Because at the end of the day, that's what matters, right? Understanding the why behind the moves.
Absolutely. That's how you make sense of it all.
So let's jump right in. Just to set the stage, remind everyone, silver's price took a real tumble, like right at the beginning of April. It was trying so hard to hold on above $35, but then boom, April 4th hits and it just crashed, like a 10% drop in a single day.
Yeah, that April 4th drop, that was intense. I think a lot of people were caught off guard by how fast it happened.
Me included. And here's the thing that really makes you think. Around that same time, the S&P 500, the stock market, it was also running into some key levels. It makes you wonder, right? Like, was this just silver doing its own thing, or was there something bigger happening across the whole market?
It's a good question. It's definitely something to consider. I mean, markets don't exist in isolation. They influence each other.
Right. Okay, so here's where things get really interesting. You've got this price action that's screaming, sell, sell, sell. But then when you start looking at the fundamentals, it's like a totally different story. One of the sources we've been digging into, the Silver Institute, they're actually predicting that, get this, for the 5th year in a row, demand for silver is going to be higher than the supply.
Yeah, I saw that. A 5th consecutive year of deficit? That's not something you see every day.
Right. And they're saying industrial demand is going to hit record highs. Think about it. All the electronics, the solar panels, even medical stuff, all of that uses silver. So on the one hand, you have the chart saying silver is in trouble. But on the other, you've got this underlying story of supply and demand pointing in the opposite direction.
It's a real head scratcher, isn't it? Like,
Yeah.
Which signal do you trust?
I know. So let's try to untangle it all. First up, let's talk technicals. What's the price action telling us?
Well, first off, there's that breakdown from a potential double top pattern. It was right around $35.
Oh, the classic double top. A bearish signal if there ever was one.
Right. It's like the price is trying to break through a ceiling, but it just can't do it. Not enough buying power. And then you add in that crazy sell-off on April 4th, almost a straight line down. And there were those gaps in the price, too.
Oh, yeah, the gaps. Like literally jumping from one price to another with nothing in between. That's always a sign of some serious panic in the market. Exactly. It's like everyone suddenly decided to bail all at the same time. And then you factor in the moving averages. Silver has now dropped below all the major moving averages on the short-term charts, like the hourly and the 4-hour. Those are like trend lines, right?
Oh.
So trading below them, well, it usually means the bears are in control.
Yep. It's basically confirming that downward momentum. It's a technical signal saying, hey, the trend is your friend, and right now the trend is down.
But here's the thing. Even with this big drop, the weekly price is still hanging on above those longer-term moving averages, the 50-week and the 200-week. Those are more like the big picture trend lines. So, yeah, things look bad in the short term, but the long-term trend, technically, it could still be up.
It's almost like, those optical illusions where you can see two different images depending on how you look at it.
I get it. Okay, so let's talk about these key levels. What should we be watching in terms of support and resistance? So resistance-wise, the first one to watch is around $30.75 to 31 cents. It's on the 1-hour chart, so it's pretty immediate. Then there's another one in the $32.15 to $32.50 range. That one's on the 4-hour chart.
Okay, so those are the short-term levels to keep an eye on. What about the longer term?
Well, the big one there is up at $43.50 to $34. That's a major resistance level because guess what? It used to be support. Remember how we were talking about support turning into resistance? Well, this is a perfect example. It's like the price is trying to climb back up a wall that it just fell through.
That's a good way to put it. It's like once a floor breaks, it becomes a ceiling.
Right. And then on the support side, The closest one is down around that recent low, like $29 to $29.25. And then the really big one, the one that everyone's watching, is way down at 25 to 26 cents. That's the yearly low on the weekly chart. If silver breaks through that, well, let's just say it wouldn't be a good sign.
Definitely not. Breaking through a major support level like that would be a pretty bearish signal.
And then there's that psychological factor too, right? Like silver dropping below $30. Even numbers like that, they can really mess with people's heads. It can be a self-fulfilling prophecy almost.
Oh yeah, for sure. Those round numbers become like magnets for the price, especially in volatile markets.
Absolutely. So we've got the price action, the moving averages, those key levels. It's all painting a pretty bearish picture in the short term. But there's one more thing we need to look at on the technical side. Volume.
Right. Volume tells you how many people are actually buying and selling. It's like a gauge for the strength of the move.
Exactly. And the volume during the sell-off, it's been huge. We're talking 122.52K on the daily chart, which is way above average. Usually when you see a high volume during a price drop, it means the sellers are really serious about it.
Yep. High volume means conviction. It means a lot of people are voting with their money and they're voting to sell.
Right. And then there was that crazy spike on April 4th. That could be a sign of capitulation. It's like the point where everyone who is still holding on finally gives up. It can actually be a bullish signal sometimes because it means there's not a lot of selling pressure left.
That's an interesting point. Capitulation often marks the end of a move, or at least pause before the market figures out what to do next.
Okay, so we've covered the technicals. Now let's dive into those fundamentals. You mentioned the Silver Institute's forecast, right? That they're predicting another supply deficit in 2025.
Yep. They're saying demand will outweigh supply for the 5th year running.
And what's driving that demand? Well, they're saying it's mostly coming from industrial uses, like all the stuff we were talking about before. Electronics, solar panels, even medical applications. The world needs a lot of silver, and it seems like we're not producing enough to keep up.
Yeah, and that's the real head scratcher, isn't it? Because if supply can't keep up with demand, basic economics tells you that the price should go up.
Exactly. So how do you reconcile that with this massive drop we've just seen? That's the million-dollar question.
It is. And it's why we need to look at more than just the technicals or just the fundamentals. We need the full picture.
Absolutely. So let's talk about some of the broader economic factors that are impacting silver. First up, tariffs. Remember all that talk about President Trump's tariffs? Well, it seems like they've been pushing more silver into those CME warehouses since late last year.
It makes sense. If you think tariffs are coming, you want to get your goods into the country before they hit.
Right. And then there's the whole global economic uncertainty thing. Usually, when the world is a bit shaky, investors flock to precious metals like gold and silver. They're seen as safe havens.
Yeah, like a store of value.
Yeah.
People think, hey, if the economy crashes, at least I've got my gold and silver.
Right. But here's the catch. Silver hasn't been performing as well as gold lately, and it seems like some of that has to do with worries about the Chinese economy. It's pushing the gold-to-silver ratio higher. So basically, you need more silver than usual to buy the same amount of gold. It's like silver's been lagging behind.
Yeah, that ratio can be a good indicator of relative strength. If it's rising, it means gold is outperforming silver.
Exactly. And we've even seen this play out in specific markets. Like, take India, for example. After they announced some tariff changes over there, gold prices actually went up. But guess what happened to silver futures?
Let me guess. They went down.
Bingo. Down they went. It really shows you that different markets can react in completely different ways to the same events, depending on local factors and what people are thinking.
Yeah, it's a good reminder that markets are complex. There's never just one simple explanation for why prices move the way they do.
Okay, last but not least, let's talk about sentiment. How are people feeling about silver right now?
Well, you can probably guess the answer to that one, right?
I'm guessing not so great. You got it. The mood has definitely shifted. It wasn't so long ago that people were feeling pretty bullish about silver, especially when it was testing those higher prices. But now, well, this sudden crash has made a lot of people nervous.
Yeah, it's understandable. When you see a drop like that, it's hard not to get a little spooked.
And the speed of the drop, it suggests that there might have been some forced liquidations and margin calls happening.
The joys of leverage. It can magnify your gains, but it can also magnify your losses.
Right, and when the price drops fast, people who are borrowing money to trade, they can get squeezed and forced to sell even if they don't want to. And that just drives the price down even further.
It's a classic snowball effect. One selling order triggers another, and before you know it, you've got a full-blown panic on your hands.
And that feeling of panic, that's what often leads to capitulation. Like, remember we were talking about that big volume spike on April 4th? That could be a sign that people just gave up and said, okay, I'm out.
Makes sense. Sometimes, when a market gets too emotional, whether it's too euphoric or too panicked, that's when things can get really unpredictable.
And it's not just the price action itself that's telling us the sentiment has soured. The silver mining stocks have also been taking a beating. The junior miners especially, they were down like 13% last week.
Ouch. That's a pretty big hit. It shows you that the negativity is spreading across the whole silver sector.
Right. And then there's that gold to silver ratio again. We were talking about how it's been rising, which means gold is outperforming silver. Well, that's another sign that investors are getting risk averse. They're moving their money into what they see as the safer bet, which in this case seems to be gold.
So if we're looking for signs that sentiment is improving, we might want to watch that ratio and see if it starts to come down again.
Exactly. All right, so we've looked at the technicals, the fundamentals, the broader economic picture, and the market sentiment. What's the overall outlook for silver? What do you think is going to happen next week?
Well, let's be real. The technicals are looking pretty rough right now. So for next week, I'd say the outlook is cautiously bearish. But remember, we've just had a huge drop. So we could see a bounce, a little pause before things decide what to do next.
Okay, so if we're looking at the downside, where could the price go?
I'd say the first level to watch is around $28.50. Then there's $27.75. And then the big one, that major yearly low support down at 26 cents. If silver breaks below that, it could be a sign that the bears are really in control.
What about if we do see a bounce? Where would the resistance be?
Well, the first hurdle would be that $30.75 level. Yeah. Then there's that key resistance zone around $32.15, $32.50. And then, of course, that major resistance up at $33.50.
So silver could be pretty volatile next week, up, down, who knows?
Yep. It's definitely an environment where caution is key.
Absolutely. Now, for the traders out there, what kind of strategies could they consider?
Well, if you're bearish, you might be looking to sell or go short if the price rallies back up to those resistance levels. But if you're thinking we might see a bounce, then you might be looking to buy or go long if the price drops to those support levels and starts showing signs of reversing.
But as you said, caution is key.
Absolutely. Don't forget about risk management. This is a volatile market, so be smart about your position sizes and your stop-loss orders.
Okay, so last question. Given everything we've discussed, how confident are you in predicting what silver is going to do next?
Honestly, I'd give it a 6 out of 10.
Okay, so a solid maybe.
Pretty much, yeah. I mean, on the one hand, you've got those bearish technicals staring us right in the face, but then you've also got those strong fundamentals, that story of industrial demand outstripping supply. And then there's the whole global economic uncertainty thing, which could throw a wrench into everything.
Yeah, it's definitely a mixed bag right now.
So to recap, the silver market has taken a big hit. There's no denying that. The charts are bearish in the short term, and sentiment has taken a hit. But we can't forget about the bigger picture. Industrial demand is still strong, and that could put a floor under prices eventually.
So volatility is the name of the game for the next week.
Absolutely. Traders need to be cautious and keep an eye on both those technical levels and the broader economic news. But the possibility of a bounce is definitely there, especially if the selling pressure starts to ease up.
Right. So for our viewers out there, the takeaway is this. We've seen a significant correction in silver driven by strong selling. But those fundamental factors, the supply and demand story, it's still suggesting that silver might have some longer-term support. It really makes you think, right? About how the short-term price movements and those long-term fundamentals, they don't always agree. It can be a real puzzle sometimes.
It is. But that's what makes the market so fascinating, right?
Exactly. There's always something to learn, always something to figure out.
Yep.
And if you want to learn more, if you want to keep digging deeper into market analysis, be sure to check out Demand and Supply Zone. We've got tons of resources and analysis to help you navigate these crazy markets.
Yep, and don't forget to hit that like button and subscribe to the channel so you don't miss any of our future deep dives.
We appreciate you being here, everyone. Thanks for joining us for another deep dive into the silver market. We'll catch you on the next one.
See you then.
Bye for now.